Yeah. He is up to accumulating more Bitcoin than he otherwise could have by issuing capital to the public markets. And there's several forms of capital that are available to companies that want to raise money. So how do you raise money if you're a company? Well, you can borrow. You can borrow from a bank. You can borrow from the bond market. You issue a bond, people buy the bond, they're your lenders. You can issue equity. By the way, he has issued equity. He has sold portions of MicroStrategy Company, the stock, and used the proceeds to buy Bitcoin. Now, a convertible bond is a tweener. It's a hybrid between debt and equity. And it's technically debt, except for it has a feature, an embedded call option, whereby if the stock price goes up enough, as a bondholder, you can convert your bond, which is a fixed dollar claim, into an ownership stake, an equity stake in the company. And usually that conversion premium is between 25 and 40% above the current stock price. And so he has done that in size. He just completed 2 deals right in a row. I think just in the last week, right? Did an $800 million deal and a $500 million deal, if I'm not mistaken. And so, so anyone who's investing in that is saying, well, I like having a debt claim against the company because if either he's wrong about the price of Bitcoin or it takes longer to play out, like let's say, I don't know, it just takes longer for Bitcoin to continue advancing. Maybe it takes more than a 4-year cycle this time for whatever reason. I have a debt claim against the company and I have a maturity. So like if it really goes off the rails, if it's a 5-year maturity, I come to the table and basically I can demand my money back. So I have downside protection.
How does he pay that back?
Well, that's the question. It's scenario analysis. So if, and it's smart, obviously, if all goes well, as it has done, and we have 4-year cycles, let's say cycles that are net upward and not much longer than 4 years, then issuing 5-year maturities is smart because he's bought himself a whole cycle and a little bit. But, if Bitcoin goes down and stays down for a long time, number one, and number two, if he can't bear the interest, cover the interest from the cash flows of the company, then he's got an issue. Now, the coupons on these things are tiny, right? They're less than 1%. So the interest burden is quite small, but it's harder to negotiate with a maturity. So this gets to, good kinds of leverage, bad kinds of leverage. The longer your maturity, the better. That's what a mortgage is, right? As long as you can make that interest payment, you got 30 years before you have to worry about a maturity, at least in the US, not so in the UK. That's a different thing. But for MicroStrategy and for Saylor, I think that the scenario in which you would have a problem is Bitcoin price goes down, stays down, and then he reaches a maturity. And even though his business is doing fine and his cash flows can cover the interest, his cash flows might not cover the maturity of that debt. And he may have to issue new equity and dilute the existing shareholder base or, take other action.
Okay. And the other action would be sell Bitcoin, right?
It could be.
Or it could be another loan.
It could be. Yeah. I mean, there's, he's a known quantity now. The company is...
It's unlikely he sells Bitcoin.
Tens of billions of market cap. I thought I saw it's like a $30 billion market cap now or something.
Have a look.
Which I looked that up and I was thinking, gosh, is that right? It seems too high, but number went up. And the stock is trading now at a sizable premium, I think on the order of 70% or something to the value of the Bitcoin on the balance sheet. And so, by the way, people are looking at it as an investment. First of all, if you've been invested, hat tip, you've made a ton of money. I think, one of the things that's worth doing and thinking about as an investor is a sum of the parts analysis, right? Basically Wall Street 101. If you can split this business into the balance sheet Bitcoin plus the cash flowing business intelligence software business, which has a value, which is some multiple of cash flows, and then there's some additional premium right now. And that premium exists partly because we're in a bull market, partly because he now has a demonstrated track record of raising capital efficiently and effectively, such that the number of coins, right, per share is going up and the price is going up. So he's doing right by his investors. And so now he has credibility having done this through a cycle. I think that's one of the main reasons why there's a significant premium now in the stock is he has proven an adept capital allocator, right? It's the same reason, arguably, that Berkshire Hathaway trades at a big premium to its book value or its net asset value, is people look at the guy at the helm and they say, oh, this guy's pretty good at allocating capital. And maybe if I'm a shareholder, he'll do it cleverly and it'll be accretive to my investment in the long run.
But he's stacking up debts that have to be paid at some point.
Well, they only have to be paid if they don't convert to equity.
Okay. Does it convert is it an option to convert it? Or
It's an option.
It's an option.
Yeah.
So they could choose not to convert it.
You could.
Is that unlikely if there's the premium?
Yeah, and look, it's a fair question. I mean, it's been a long time. Well, first of all, I have not dug into the indentures on the new issues that he just did last week. And it's been a long time since I looked at the issues that he did, the convertible issues that he did in the last cycle. So there may be some period after which, the conversion option ends.